Hi, welcome to Main Street Macro. I'm Neela Richardson. One of my favorite things to do with my family is to play board games. Our favorites include chess. The boys are really good at that. My game is Scrabble. And then my husband and the whole family gets in on Monopoly. But as much as I like board games, there are some I really don't like, especially when it comes to the economy. And that includes guessing games. But that's exactly what markets are doing right now. They're trying to guess the future direction of the economy. So, in honor of where we are in the economic landscape, I thought it would be great to play a game this week with economic indicators. I like to call it peak or plateau. So, let's get started. You tell me whether we are at a peak or a plateau given the inflation and labor market indicators I'm about to reveal. Let's start with number one, inflation. Last week, we got a big inflation print. That inflation actually dipped to 8.3% from 8.5% uh, from the previous month. That was pretty much what markets expected. The commentary around inflation was that inflation would reach a peak. But what did surprise markets is core inflation. That's when we strip out those volatile food and energy prices. Yes, that dipped a little bit from where it was last year. But what markets didn't expect is a big bump up in core inflation from March to April. It actually rose by 0.6%. That's a lot. What all those numbers mean is that inflation is likely to accelerate around the same level for some time to go. So we're going to call this a plateau. The second place to look in terms of our guessing game is labor shortages. Small firms are still seeing hiring challenges, and those hiring challenges don't stay with small firms. We're also seeing larger firms struggle to compete. If you look at the labor force participation rate, it's hovered around this very small range of 62.2 to 62.4% for several months now. And so when it comes to labor shortages, we're still seeing somewhat of a plateau, and that's kept real wages down. That's wages adjusted for inflation down 2.6%. So we're still seeing a plateau on that front. And then the final place we can look in terms of our guessing game is the gender pay gap. And here we actually see some good news. In 2019, before the pandemic hit, women made about 80% of what men made, according to ADP data. More recently, after 2 years of the pandemic, that gap has narrowed. Women now make 83% of what men makes. But that's not the whole story. In fact, the reason why we've seen the pay gap narrow is because so many low income women lost their jobs as a result of the pandemic, making that gap look artificially narrower than it was before. Now, it's not all bad news because we actually are seeing shimmers of hope. In fact, in two industries that weren't as impacted with job losses, those industries being manufacturing and trade, we've seen improvement in manufacturing. For example, women now make 93% of what men make. And that compares to 86% before the pandemic. That is good news. That's a place where we're not necessarily seeing a plateau, but progress. Plateaus don't last forever. Eventually, inflation will fall, shortages will ease, and even something as persistent as a gender pay gap will eventually narrow. The guessing game is when. Thanks for watching the Main Street Macro. For more information on the week ahead and a deeper dive into the inflation picture, please go to adpri.org.